Hi everyone, and welcome to my morning report analysis videos with me, Rich Perry, market analyst at Hantec Markets. We've got what initially looked to be a somewhat of a cautious market open, but that has sort of been generating into a bit of an improved risk sentiment as the equity markets have bounced. Look at that DAX, that's up over 100 ticks now. Certainly seems as though that there's a recovery that's building on the DAX. Analysis is on our website on the DAX futures there, but we've also seen that the gold price has started to fall away back a little bit in the correction. Little bit of outperformance still in the yen. But it's interesting to see the euro and also sterling starting to underperform against the dollar. We've also seen the commodity currencies, Aussie and Kiwi, higher. The Aussie is higher in the wake of the RBA monetary policy decision. But yeah, just generally speaking, we are starting to get a bit of a rebound on these markets. Also, look down here, crude. WTI and Brent crude, that gap, that spread between WTI and Brent is starting to close a little bit more. So let me just show you some of the factors here. We've got treasury yields which initially were lower and that started to bounce a bit on the 10-year and the 2-year. That has helped to or no, not so much on 2-year, but certainly the 10-year. But that certainly helped to generate a little bit of dollar rally today. Now we've had US markets that were closed yesterday for Labor Day. There'll be a little bit of probably a little bit of a reaction lower initially, but I'll be surprised if that lasts for too long, because the outlook certainly seemed to be pushing higher on Friday, just in front of that public holiday that we had yesterday for Labor Day in the States. But generally speaking, slightly improved, certainly on the equity markets from yesterday, and a bit of a dollar rebound as well. So what else have we got to look forward to today? Well, we've got the we've had the PMIs now for the European markets. Let me show you how the Eurozone slightly underwhelming on the UK, but the Eurozone was basically as is. Eurozone final composite just 55.7, 55.8 was the expectation, 54.7 on the services, 54.9 expected. So just slightly down on the flash readings, nothing too significant. UK services PMI 53.2. That was a 12-month low there on the services PMI for the UK, and a bit of a disappointing number as well. So it's slightly sort of one of the reasons why sterling and the euro are both lower today. But into the US afternoon, we haven't got the ISM data today for non-manufacturing. That's tomorrow because of the public holiday yesterday. We do have factory orders though for the States expected to be 3.2% negative on the month. So that takes me to my chart of the day, which is the Kiwi dollar. Now the Kiwi, if I can get it, Kiwi dollar the daily chart, let's look at that first, has been in this trend lower for the past, what's that, 6 weeks or so, 7 weeks, and that trend has been falling quite consistently, with lower highs, lower lows, and breaking below this 72 figure support. I think that's a key level. That had been the support between June and July, sort of held up through August, but then broke last week, and that breakdown has subsequently failed on Friday around that level as well. So 72 figure, I'm taking 72 to 72.40 being a bit of a sort of a near-term sell zone. 72.40 is an old level as well from February and March. So 72 to 72.40, I'm taking that as a sell zone now. And you look at these momentum indicators, negatively configured across the MACD lines, RSI and stochastics, all suggesting selling into strength. Now that sell zone between 72 to 72.40, that basically encapsulates the or comes underneath the downtrend. So that would be just a little bit of an unwind to the downtrend, and I think that that's likely to be a selling opportunity. So that's the sort of movement that I'm looking out for in the next sort of day or so. Now we've got the momentum indicators on the hourly chart back towards 60, actually going above 60 in the last hour, as you've seen a little bit of an improvement in risk appetite developing. but generally speaking, I think this is back to a level at which the sellers are sort of going to be looking at an opportunity again. That big 72 figure resistance of the old support turns into new resistance, and that is a fairly consistent line. So this looks to be a little rally that could well find a bit of a struggle now on the Kiwi and a selling opportunity. So with that in mind, you look at the sort of supports that we've had throughout the last week. 71.30 yesterday, 71.36. So a retest of those sort of two lows I'd be expecting to see in the coming days as this rally starts to lose steam. Retest those lows, and ultimately a retreat back towards 70.50 could well be seen. This is an old pivot from March, April and May. Perfectly possible to see that as a retest in the coming days or even next couple of weeks. So I wish you good luck in your trading today, and I will speak to you later. Thank you.